Right, welcome. You're watching BQ Prime. Thanks for staying tuned. I'm Hersh Sayta. We have with us Amitava Mukherjee, who is the CMD at NMDC Limited, to chat with us about results, how the company is performing, what can we expect going forward. Of course, NMDC Steel completely demerged now. What going forward on that count as well. Thank you, sir, for joining us. Let me quickly jump onto the first question. Realizations as well as EBITDA per ton has come down sequentially when I'm looking at it. Are you expecting these levels, or are you expecting some bit of recovery to come through on those?
The pricing, I hope that we have some headroom for increasing, which will increase our EBITDA, etc. But for this FY, as such, I think the EBITDA margins will be at around anything between 40 to 42%. Because the current prices, whatever prices that we are expecting for the greater part of the year, 45% goes to taxes, 20% to around what is royalty and DMF, and 22.5% on additional royalty, and another 2.5% on various forest fees and all those things. So 45% straight away goes to taxes. Another around 30% to 40% is the cost of production. So that leaves an EBITDA of around 40 to 41%, around 42%. So that is the range that this year we expect our EBITDA to be on an overall basis. Of course, prices, I hope at the bottom up, but there is some, I expect there's some headroom for further increase. We are taking a look at it, and we'll take a call sooner than later.
Right. And, when I'm looking at global prices versus domestic, there is a sharp discount. Could you give us perspective on that? So, firstly, why such a large discount? And secondly, is this sustainable? Will this reduce at some point in time?
You see, the domestic prices in the East Coast for the high grade ores, that is above 58%, has always been under discount of around 40 to 45% of the international prices. Now, if you see our company and if you see the net domestic realization, 30% goes to export duty. I have another almost $20 to take it from my mine to the port at Vizag, and then another 20% for the royalties, etc. So if I were to knock off all these from my export realization, so my net export realization, net of all these expenses, and are still almost at par or slightly marginally less than our net domestic realization. So to that extent, it has always been such has been the fact for quite a long time.
And how do you view global prices? Are they going to continue to stay at these levels, or are you seeing some bit of pressure coming in from a global price standpoint?
So the global prices of the last 1 or 2 years have been rather volatile. Any long-term prediction is difficult to make. The prices have hovered up to about 2 years back to $270 a ton, back to about in the 90s, now again back to the mid-hundreds around that. So it's been rather a volatile, making a long-term prediction is very risky and uncomfortable at this stage. It all depends on how, of course, China is doing at the world market. So this, I hope, is I believe would not be a very long-term sort of an increase. It's more of a short-term rather than a long-term.
Right, and point taken. Let me switch over to volumes. Right, you've guided for 50 million tons of production sales in FY24. We're at roughly 24 million tons in terms of production, if I've got that number right. Likelihood of 50, and where should we expect that to go in FY25?
Our guidance has been around 47 to 49. We'll try, and we've always been saying 50 is aspirational. Maybe we get there. We are on the way. We are on track, if I were to say so. I think the production till date has been around 26 million tons. Sales has been around 27 million tons. Now, if I compare it with the last year, around this time, it's been around 22 million tons of production. So that's around more than 20% increase. Sales similarly was around 21.7 million ton last year at this point in time. We are at 27 million ton. So that's more than around 22-23% increase. So if you factor that in, if you factor in Kumaraswamy additional capacities coming in, Bacheli additional capacities coming in, the 47 to 49, I believe, is something that will happen. 50 is aspirational. That's the thing that we will be seriously looking at this year. Next year for guidance, of course, our EC capacity will stand at 53.5 million ton. And we hope to achieve that in the next year. Around 53 would be the next year. Further increase is subject to getting permissions for additional EC. So that we have set the motion in process, but that's a fairly long procedure. So we will take the entire next financial year to get those approvals and then make those investments and realize.
Right. And Mr. Mukherjee, if I can ask you, what are the risks to this guidance?
As of now, the current year guidance, I don't see too much of a risk because the Kumaraswamy additional 2.2, 2.3, it's around 7 to 10 days away. We've got all the permissions, only the MPAP, that is the quota distribution of the distribution of the ceiling. That should come within another 7 to 10 days. Our Bacheli second line expansion, I think we have already made the load tests. We are just going to operationalize it within another 7 to 10 days. Similarly, if you see our rapid wagon loading system at Kirandul, which will add at least 2 rakes. On an annualized basis, 2 rakes is around 2.5, 2.6 million ton on an annualized basis. So we are going to increase our dispatches by that figure from Kirandul. We have another 4th line in Bacheli, which will be operational anytime within week, 10 days, hopefully. So that's another thing. So if I were to take in all these factors and our generic growth, without any of these factors, has already been around 20-22%. So we see on an annualized basis 47 to 49 to be a rather safe bet rather than a stretched target. 50 is a little stretched. That's what is aspirational, but not impossible. It's aspirational, but not impossible.
Sure. And, you plan to clock 100 million tons by the end of this decade, 2030. When can we see a significant bump up with regard to capacity? Which are the years or the block of years?
Capacity will obviously happen at the end of the decade. Because right now we are in the process of studying the market. We have employed many consultants to tell us how the market will behave in next 5 years and then 10 years and then 15 years. And what we are doing, we are right now at the drawing board stage where we are planning the infrastructure required to service that. The current infrastructure obviously will not be adequate. So in terms of stocking yard, in terms of blending yard, in terms of evacuation facilities like slurry pipeline, etc., etc. Now we are all making those projects. So that should take about a year to get these first planned and then sanctioned. And FY26 onwards, I expect boots to be on the ground and money being actually spent from FY26 onwards. So that's another 4-year investment term only on the distribution infrastructure. So obviously they will all come almost together in around FY30. Similarly, if you see production side also, that will require another investment of anything between 5 to 10,000 crores. One of the projects we have already sort of got it sanctioned in Kirandul, 5 to 10 million tons. So these individually will require to be planned, engineered, got sanctioned, then tendered out. So I think all these projects will ultimately be commissioned around FY29, FY30, and that is where we see a quantum jump. In the intermediate period of 3 to 4 years, it will only be incremental, but the quantum jump will come around the end of the decade.
Understood. Got it. And could you also highlight what kind of capex are you going to be playing out in FY24 as well as FY25? If I understand correctly, 800 plus crore of capex already done in H1 of FY24. The target was 1600 crore odd. Does that mean that you're going to do a little more? Are you going to overshoot that? And what about FY25? What kind of guidance do you have for us?
Yeah, of course, we are going to definitely overshoot our capex targets of 600 crores. And it is a happy situation to be in. We have actually now got a complete new vertical only managing projects. That's a completely new vertical, and they are been empowered. They are at the site. So that's a very decentralized sort of setup that we have created. And obviously, we're going to do more than 1,600 crores. Next year, we expect to do around 2,200 crores. And if you see the figures till date, I think we are almost 80% above our proportionate target, what we expected to do in, and 40%, 40 to 45% higher. I think it's around, the actual figure is around 48% higher on similar expenditure as compared to last year. So we are very confident that we'll be doing around definitely more than 1,600 crores, which was our initial guidance, and 2,200 crores about next year.
Understood. Got it. And you have 14,000 crore of cash. If I add that 16 and 2,200 odd crore, adds up to roughly 4,000. What are you going to do with the balance? You have a large cash balance, 10,000 crore on a market cap of roughly 50,000 crores, so 20% even post the capex, and of course profits which will come through over the next couple of years. How should one look at your cash flow?
Well, two parts of it. One is, of course, we need to build a war chest for our huge capex plan that we have for the later part of the decade, which we are right now at the drawing board stage. So that's one thing that we need to factor in. And of course, as you know, that we have been distributing a fair amount of dividend. Always the average payout, if you see the last 5-6 years, has been around 40. If you include the buyback and dividend together, the average payout has been to the tune of 40-45% of our net profit traditionally. Exactly what it will be, the board will take a call on the dividends. But yes, we are mandated as a PSU, as a profit-making PSU, to distribute at least 30% of our PAT or 5% of our net worth, whichever is higher. So that's the minimum mandate. But traditionally, we've been doing around 45, around that mark.
Right. Understood. So you'll probably continue to hold on to a large or significant portion of that 10,000 crore is what I understand. Is that the correct way to look at it?
Some of it, yes. Some of it would be continued there. I see it as a sort of a war chest when we go into the full stream investment by FY26, which is our target. The investment should start rolling out around and all simultaneously. So that would be the war chest that we would require at that point of time.
Sure. Understood. Point taken. My last question is with regard to NMDC Steel. Of course, now there's a separate listed company there, but there's of course some amount of chatter that you all will be acquiring some portion of NMDC Steel's equity. What's the plan there, and is some of the cash also going to be deployed to NMDC Steel? Is that really the plan?
So far as the acquisition part of NMDC Steel is concerned, that is more of a discussion stage. We've been asked informally. We are completely okay with that. We don't mind that. But no firm offer has been made. No prices have been indicated. So we can think about crossing the bridge only when we get to the river. So that's obviously a call that's to be taken when such an offer actually materializes on the deal. So far as NMDC Steel is concerned, we are now focusing on ramping it up. Last 3 days, we have ramped up the blast furnace to around 66-67%. We have done on average of last 3 days around 6,500 metric ton out of our blast furnace. So that's around more than 65%. Our focus is right now ramping up by the year end to a capacity of 65 to 70%, and next year to full 90%, 100% next year. So that's our focus area now, and we are on track because the last 3 days we have done more than 66%, and we are hopeful the next two downstream plants, which is the SMS, the steel making shop, and the caster and the mill, we will be able to take it to that level. So that's our prime focus.
Right. Thank you so much, Mr. Mukherjee, for all of those thoughts, and of course, summing it all up for us with regard to even where the industry is headed. And of course, looking forward to interacting with you more often going forward.
Thank you. Thank you so much. Thanks for having me.